Markets will be driven by these three big unknowns in the year 2023. The new year is a time when many feel refreshed and motivated and optimistic about the year to come. The biggest question is whether or not the United States will enter a recession this year. The Fed is trying to cool the labor market. The central bank expects unemployment to rise to 4.6% this year, meaning jobs will have to be cut in order for the Fed to reach its 2% inflation target. Goldman Sachs predicts that wages will grow at a slower rate this year than they did in the past. They write that a sizable drop would provide the Fed with a proof of concept for the idea that gradual labor market rebalancing can help to keep wage and price pressures down. The Fed taught investors that they can't beat it. The economy was on the backs of American consumers last year. The answer to this question will help determine what happens to markets this year, and also whether the economy will fall into recession. The minute officials welcomed softer inflation reports in recent months, but they stressed that more evidence of progress was needed and that inflation was still high. The Fed could choose to raise rates more slowly or not at all as the year progresses, which would be good news for investors. Mortgage rates went up last week, beginning in 2023 twice as high as they were a year ago. The 30-year fixed rate was up from a week inflation begins to ease, rates are expected to also fall. Sam Khater, Freddie Mac's chief economist, said that mortgage application activity sank to a quarter-century low this week as high mortgage rates continue to weaken the housing market. The company is still looking into alternatives, like restructuring its debt, and is looking for additional cash and assets. Neil Saunders, an analyst at Global Data Retail, said in a note to clients that the most likely outcome is a Chapter 11 reorganization. Like and subscribe our channel for more top news.